In this video, I'd like to go through a classified balance sheet problem. This problem is actually going to be very similar to the one that you have as the assignment that is going to be due this week. What we have is we have listed accounts. These accounts are listed in alphabetical order, and you notice that there is a missing variable. The missing variable is cash. In this example, the adjusting entries have been completed. So you notice that there's nothing such as net income or expenses. All of these items have been rolled into retained earnings. So we are simply looking at the balance sheet and allocating these accounts based upon whether these are assets, liabilities, stockholder equity. And given that we are using a classified balance sheet, we also want to be able to allocate these based upon whether they are current assets or long-term or fixed assets. And then on the liability side, we have current and long-term liabilities. So we're going to do this in two steps. The first step is taking a look at these accounts and allocating these based upon whether these are assets, liabilities, or stockholder equity. In addition, we will then go through this process of determining whether these items are going to be current or long-term. So I've started a couple of columns here. So the first column we're going to call assets. And again, we're going to attempt to allocate these based upon liquidity. With liquidity, the first item is going to be cash. Then we have over here liabilities. And then somewhere down here is going to be our stockholder equity. Okay, so let's go through these accounts and just talk about these in terms of what these might be. So the first category is going to be current assets, and we have current liabilities. We also are going to have long-term or fixed assets. And then over here, we're going to have long-term debt. So I think we've got enough categories that we can kind of work through. So let's look at the first item. And by the way, just to make sure that we understand that ultimately our assets are going to have to equal our liabilities plus stockholder equity. And given the fact that we are missing a number, we simply need to find out what that number is to make the calculation actually correct. So the first item is going to be accounts payable. Accounts payable is something that we owe. And we've talked about is accounts payable is something that is due in the next period. So this is something that we would consider to be a current liability. When we look at accounts receivable is what is a resource, is what is owed to us. These payments are going to be made within the next period, so they are current. However, they're not going to be the first item. The first item is always going to be cash. So we're just going to allocate this down in this line over here. Okay, let's look at the next item. And it may be a little bit confusing, but first let's consider what we're talking about here and see what this means. When we were doing the adjusting entries, one of the adjusting entries related to accrued expenses. So as an example, wages payable is an accrued expense. The expense side would be allocated to retained earnings as an expense, and we see that that has been rolled into retained earnings. To complete the equation, we have a liability. So this may be wages payable or any of these accrued expenses where there is a liability. The accrued expenses we're going to assume is going to be a current liability. And again, an example of an accrued expense liability would be wages payable. Let's look at this one here. Accumulated depreciation. Accumulated depreciation is a part of our fixed assets. And what we mean by this is a contra asset, and it's contra or against our property, plant, and equipment. So we're going to put this over into our fixed assets as property, plant, and equipment. However, keep in mind that the accumulated depreciation is an adjustment. The adjustment is based upon our property, plant, and equipment. So what we have here is we have property, plant, and equipment less accumulated depreciation. So our accumulated depreciation is actually going to be a negative amount. Let's go through some other items. Cash, we don't know what that is, but cash is a current asset and it is always listed first. Common stock is a part of stockholder equity. So we'll slip this over here. Debts due within 1 year. Given the fact that it's due within 1 year, this is considered a current liability. So we're going to allocate the current liabilities over here. Intangible assets. Intangible asset by definition is an asset, and it's intangible in the sense that it has no physical form. Generally speaking, this is associated maybe with an acquisition or the development of a patent or something to this effect. These would be considered long-term fixed assets, and it's long-term in the sense that we are not intending to convert this into cash anytime soon. Inventory is an asset. Inventory, we are going to assume, is going to be a current asset. So we're allocating this over to current assets. Long-term debt, by definition, is going to be allocated over to long-term debt. Other current assets, by definition, we are allocating this over to other current assets. Other long-term assets, we can certainly allocate this over to other long-term assets. Other long-term liabilities is going to be a part of our long-term debt. Other stockholder equity items. Well, we haven't really gotten into this in this course, and I don't think that we actually will, but embedded in the stockholder equity section is there are other accounts. An account, as an example, would be additional paid-in capital. Again, a bit premature in terms of discussing this, but given the fact that it is stating that this is stockholder equity items, this is going to be a part of our stockholder equity. Considering some of the other items, prepaid insurance clearly is going to be a current asset. Retained earnings, as we've talked about in the past, retained earnings is a part of our stockholder equity section. And then finally, unearned revenue. Unearned revenue is revenue that the transaction has not been completed. We received cash in advance. Therefore, the unearned revenue would be considered a liability. We're going to assume that liability is short term. I'm just going to scoot these around so that we have a little bit of space here. But we have long-term debt. We have 2 items here. We have stockholder equity. We have 3 items over here. In the liability section, we have the current liabilities. The current liabilities includes accounts payable, accrued expenses, debts due within 1 year, and unearned revenue. On the asset side, we have a couple of items here. We have the current assets. The current assets includes cash, accounts receivable, inventory, other current assets, and prepaid expenses. Again, at this point, we don't know what our cash is, but it's going to be easy to figure out. We have our long-term and fixed assets. These long-term and fixed assets include intangible assets, other long-term assets, and then property, plant, and equipment, and the associated accumulated depreciation. Now we have everything that we need. So the question becomes what is cash? Well, cash is simply going to be the plug-in number that makes our liabilities plus stockholder equity equal to our cash. So let's see what we have here. So if we sum all of our liabilities and stockholder equity, we get an amount of $787,504. If we do the same sum on the other side, what do we get? We get $677,566. So what we know is that the current and long-term assets needs to equal our stockholder equity and liabilities. So we simply do the difference, and the difference is, we'll just sort of plug in the number over here, is going to be the difference of 787 minus 677,566, and it's going to be $109,938. So that gets plugged in there, and you notice that our assets equal our liabilities and stockholder equity. Now, this is not the complete allocation. What you will do in your problem is you're going to identify the amount of our current assets, the amount of our long-term and fixed assets, the amount of the current liabilities, long-term debt, and equity. I'm not going to go through that part of the problem because I don't think that's really that difficult to do. Is all you need to do is you need to identify each of these items and where they fit into the balance sheet. You allocate based upon current and long-term for liabilities and our assets. We have stockholder equity. Once we identify the value of our stockholder equity plus liabilities, we know that that is going to equal to our assets. We calculate our assets, and then we figure out through a plug-in number what our missing item is, and I think the missing item is cash. So I hope this helps. Again, this is not a difficult problem. You really need to think through it in terms of what is the classification for each of these accounts. Once you've determined the classification, you're going to be just fine. Okay, so I thank you very much, and you have a great day. Bye-bye.